Hello, everyone. Today I want to share a strategy you can use to earn outsized return on your everyday expenses. First, we'll need to identify why the traditional credit card rewards model is trash. The first issue, growing annual fees. Not long ago, American Express Gold was a $100 annual fee card, I believe. It then grew to $250 and is now sitting at $325 annually just to use the card. It provides what appears to be high point quote unquote multipliers for specific categories, but these points are limited to where you can even spend them. Chase Sapphire Preferred is another popular option. Like American Express, they entice you with an initial large bonus. The human mind justifies the large expenditures because, quote unquote, they're getting points, but forgets those points are worth very little, and they can quickly lead to carrying credit card debt. And honestly, after you use the intro bonus, what you'll find is that you'll earn points for 2 years. See, you have 80,000 points or whatever, which seems like a lot, but really translates barely into a one-way economy trip overseas. At least that's been my personal experience. Now I'll bring your attention to the Crypto.com debit card. The beauty and power here of these cards is twofold, but before I get into that, I want to express that I am not a licensed financial advisor. I am not a certified public accountant or anything of the sort. I am a human with a brain that recognizes patterns and takes action on the obvious. The obvious is that you are not earning random points here. You are earning CRO, which is Crypto.com's economy digital asset, and it's capable of appreciation and depreciation like any other digital asset or crypto. This is all dependent on market timing of that asset, of course, but I'm going to show you how that is very easy to do. But first, let's look at these terms here. For the sake of applicability, we're going to ignore the quote baller tier of cards, the icy white, the rose gold, obsidian, prime, etc. Plus also these require you to stake, and you definitely don't want to be staking from our current place in the market cycle. I'll explain exactly why in just a moment. But first, let's look at the terms of this second and third tier. Now they have their own equivalent of an annual fee. You can either stake, which means lock up your CRO for 12 months, or pay an annual or monthly fee of $50 to $300. Ignore those amounts for right now. I want to get into the real power of these cards. I want to bring your attention to the terms where you earn on everyday spending, not specific titles. So earn 2% on everyday spending with a monthly cap of $25, or with the Royal Indigo tier, earn a monthly cap of $75. What that means is if you get the Ruby Steel after you spend 1,200, they have a cap of $25 and it's 2% on spending. So what that means is after you spend $1,250, you'll have reached your cap. That's 2% of 1,250, that's $25. For the Jade Green Royal Indigo tier, that comes out to 3% of $2,500 per month. And if you think about it, you can put rent if they take debit cards. This is coffees. This is dinners. This is gasoline. This isn't random expenditures. This $2,500 can be eaten up quite quickly. And you're thinking, okay, I get $25 a month in CRO. I get $75 a month in CRO. Whoop-de-doo, your appreciating asset. I had ChatGPT pull up the halving dates. We're going to look at the most two recent ones, May 11th, 2020 and April 20th, 2024. Let's start with May 11th. Look at the price of CRO on May 11th. This is roughly, we'll say, 7 cents. And then right before that bull market took off, it already appreciated to 18 cents, rough almost 19. Then it runs off. You've been dollar cost averaging through your normal spend since May 11th all the way up to November, October 2021. I believe that's 17 months. And then we'll say your average purchase price was 13 cents. And then it runs to nearly nearly 70 cents, we'll say, off of your average dollar cost average of 13, and that previous whoop-de-doo number of $425 gets multiplied by this amount, which appears to be like 3.5, 4x almost your money from an average of a 13-cent buy. So a 4x is really good on returns. That's for passive income. That's $1,600. You'd be silly not to use that. April 20th, 2024, we see that the price was averaging right around 20 or 12 cents, but it spends a lot of time under 10, which your $25 a month crow would be accumulating at. And now look, we're back above. We almost touched 30 again with crow, but the price action is volatile during the bull markets. But again, if you were able to dollar cost average your regular everyday spend at $25 and getting crow at 8 cents, at 9, at 7, at these numbers, just off of your regular spend, and then it flips your entire stack to nearly 30 cents based off the average of what you got. It's a really great way to hack buffering your expenses. Like, everyone's talking about inflation and how difficult society is giving in finances. Yes, savings is a big deal, but personal credit card debt is the number one destroyer of people's financial mobility. So that's another thing I love about the card. It forces you, it's a top up. It's not really a credit card. When you don't have funds, it stops clearing. So to avoid that decline moment, you have to get in the app and manually add currency to the card each time. It's a great way to like avoid that passive spending we like to do socially when we get invited out by a friend to go somewhere, et cetera, et cetera. So why staking is a bad idea right now is because of where we are in the cycle. Right now, we are currently uh, this says, okay, so the most recent halving was the 14th or August 20th, 2024. I cannot read. August 14th was the latest date. That was 16 months ago. We're coming up on 18 months now. In my opinion, the cycles are getting slightly longer. I mean, obviously they are, but this is not enough data to draw a conclusion on that. But that is the trend: 12 months, 17 month, 18 month, and we're coming up on 18 months. October 14th will be apparently. I think this cycle is going to extend closer to the 20 to 22 month range, simply because of all of the events that are happening. Anyways, what you'll see here though is a 12-month crow staking period. The last two cycles, they were only 6 months. And even then, if we were talking 6 months from today, I would tell you it's a horrible time to stake. This was not an influencer video, affiliated video in any way. I just like the product. But staking 12 months from today will almost guarantee put you in the absolute gutter of any of these Bitcoin peaks and valleys we see during cycles. The halving typically occurs in the first third of the cycle, and if we're roughly 18 months in, and if I'm expecting the cycle peak to occur between 20 and 22 months, staking for 12 months means you cannot sell your crow until the time is over. I'm personally expecting the peak to fall between November and February. This will not give me my funds back until for another 12 months, which would put us at October 2025, which I'm almost certain is going to be a solid 5 to 8 months after the cycle peak, which would be a huge no. So that is why, but in my opinion, it is worth opening up a Ruby Steel or Royal Indigo card now. There is a bit of a process. It's been 2 cycles since I ordered my card, but I do know it took a while, and I'm talking several months to get my card. I don't know what their current time is, but it's not a particularly fast process. So I would say go ahead and just sign up for Ruby Steel or Royal Gold and just try it out. Connect your bank, see how useful the app is, and start using it. So by the time, because it's going to probably take you 2 to 4 months to get it, that's going to be around cycle peak. And by the time you get around to actually wanting to load and do all that stuff, it'll be the perfect time to start that accumulation process again. It'll also get you familiar with using the card. And again, it's a really cool financial hack to just make your money work for you. And that's why I'm sharing it. Feel free to not use the advice. I really don't care. Have a good day.